Hi, everyone. Welcome to another episode of the Latam Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Daniel Gewehr. Daniel's the head of equity strategy at Itaú. Itaú is one of the largest and most important banks in Brazil. And along with his team, they publish really great research about the Brazilian and Latam equity markets in English. So that's what we're going to talk about today, a few of their most recent research reports, which, if you're interested, you can find in the show notes below and follow along with the conversation. So, yeah, I'm excited. Let's do it. Hi, Daniel. How are you?
Hi, Patrick. Thanks so much for the invite.
No, thank you. It's a pleasure to have you, and I appreciate you taking the time. So, before we get into the research and the market stuff, can you maybe tell listeners a little bit more about yourself? Where you're from? Where'd you go to school? What led you to working with equity strategy?
No, thank you. I'm from the south of Brazil, a city nearby Porto Alegre. I studied business administration and did a master in finance. I invest and I started working in the stock market in 2001, 2 weeks before the Twin Towers event. So I would say how to survive like crisis modes because
Mhm.
investing in Latin America and Brazil, you need to get used to the volatility. I am a lover of equity investing. So I started my career on the buy side. Working for family offices, Johan Peter family office, the owners of Grupo Gerdau. There was a interesting period where we diversified their liquid investments away from the commodities and started to investing in S&P, secular healthcare trends, or invest in domestic quality stocks here in Brazil. Then I moved to Santander. I spent 14 years in Santander. I was the head of equity research and strategy for Santander. In Santander, what was interesting, I started as the head of Latam small caps. I used to joke that stocks that nobody wanted to cover followed my research, and that was an amazing experience because I think you can find hidden gems on the small cap universe. I cover from industrials, healthcare, education stocks. I did that from 2007 until 2012. Then I became the head of Brazil strategy for Santander. I am a generalist by heart, so I like to look a lot of. That's one of the characteristics of an equity strategist. You're never in your comfort zone. Deal with a lot with a big amount of information and how you extract the signal from the noise in that matter. So in 2012, I became the head of Brazil strategy for the Santander Bank. In 2015, became the head of Latam strategy. We also had like a global portfolio of stocks that was interesting. This global portfolio, I had a very low turnover. It beat S&P for by 72 percentage points in 5 years. Basically, I would say what was the magic? I concentrated in things and move when the market was going to value. I would put a Chevron next and go. That's all. The power of compounding in the long term matters a lot. In 2012, 18, I became the head of research for Santander. In the end of 20, I decided to go back to the buy side. I became the partner portfolio manager of WHD, Global Equity Long Bias, based on Brazil. It's a very good performance fund that I was also in charge for Latin America. People didn't want to look at Latin America there because I was doing like global, and Latin was 2% of the world of
Mhm.
equity. I said, I'll leave it with me because I like to find alpha. From the period that I stayed there, more than 20% of the attribution of the fund came from the Latin region, so that there is alpha opportunity to be captured on that. I left last year and joined Itaú after a non-compete period to head of the Latin equity strategy team here. My master was in quantitative finance, so I like a lot factor investing, so you can discuss
Mhm.
value, earnings momentum, quality, position. I think this factor and quant add value. So for me, the good combination, quantitative and qualitative aspects add alpha doing the on the research process. I'm a lover of books. I organize an investment book club here in Brazil. We read more than 70 books so far. I think I was the only one that read all, but we had a group that gathers every month to read. By the way, we just read a nice book called How the World Really Works. She's not totally a direct investment book, but it gives you a thesis about energy transition and other stuff. But if somebody is interested in getting more on the book summaries feedback, that's can contact us. But that's it. I think in a naive way, I say that we are paid to learn because the job of a strategist, and in the end, I consider our team here the assistant portfolio manager of our buy-side clients. So you need to have a buy-side empathy and help them to navigate in where the world is heading, where the sector that is heading. But that's a little bit by me, more than 20 years on equity experience, and currently the head of Latam equity strategy for Itaú BBA.
That's awesome. I'm definitely going to take you up on the book club offer once we get off here. But there's a lot of threads I can pull on. But maybe let's talk about what you mentioned about Latam being maybe a little underfollowed and undercovered. And you recently held an investment conference in New York for Itaú with institutional investors. So can you maybe just talk about what international investor sentiment is towards Latam and Brazil, and what type of interest is there?
I think was the sentiment of the conference from investors was a little bit more on the cautious mode, especially for Brazil in short term. In the end, what is the main driver for the Latam equities? In the end, we are a derivative of US monetary policy. If you take us and say that in a shorter term view, the Fed will drive a lot our returns from a top-down base. In the longer term, I think we have advantages here, especially you go to the north of Latam, Mexico. You have the nearshoring trends, and by the way, the sentiment among the investors is Mexico is the structural call to be made in Latin America. And Brazil and Chile today are more the cyclical calls to be made here. And why more cyclical? I would say some pushbacks from the investors regarding the Brazil market is also on the fiscal side. How is the debt trajectory is going to end? We're now big numbers, 75% over GDP, and how the tax rates are going to influence, because the government today is a government that is trying to do the fiscal adjustment more looking for revenues and not looking much for cost cutting. So if you come with a cost-cutting initiatives, will be like more positively seen by the market. I think Mexico is perceived more as a fiscalist market in that matter. And you had a little bit on the position side that we can discuss it in details, but Latam, among the GEM active investors, is the most overrated region in the emerging markets. So you couldn't say that we are technically light. We are underrated among the global equity investors. Just to put in a context, if you take the main index of emerging markets, Latam is roughly 10%, give or take the numbers. Brazil is like 5%. Then you have the other countries a little bit less than 10%. But when you look in terms of the global equity, emerging markets around 10%, and Latam is a little bit below. Slightly above 1%. Brazil is 0.7. So if you are a dedicated global investor, you don't need to own Latam right now, because you could use like FANG stock to do that. You need to have another things. And one pushback that I receive from investors that, Daniel, I buy the thesis of valuation. We can discuss a lot in details here, but I want less volatility of earnings trend. And given Latam, and when you take what is Latam, we have on this thematic book that I sent to you, which is basically know what you're buying. What is Latin America? Basically, Latin America is a region that is very balanced among three categories. It's a financial region, is a commodities region, is an others region. So you can put like in big numbers a little bit, 1/3, 1/3, 1/3, just to simplify the reasoning. But we have a lot of commodity exposure, which make me positive for long term, because I think real assets it's still what the world needs longer term in that matter, but it brings shorter term volatility on the earnings trend. On the financial side, I am very in favor of Latam financials versus the rest of EM. And why is that? If you look like ROE of financials in Latin America is 17, 18% ROE. ROE of EM financials are on 11, 12%. So financials is good. And where is the delta positive or negative usually is on the domestic names. And here, then you have you start to see differences among the Latam countries. When you think in Mexico, you think in a country that is a very high weight of staples. So lower vol kind of stocks, like a company that we hold in our portfolio, like Walmex. Like Mexico is a staple related country. That's not true for Brazil. Mexico has like roughly 32% in staples. Brazil has around 7-8% on staples. So Brazil is a little bit more a cyclical kind of market. But if you have the view from the feedback from the conference, investors are kind of on the wait and see mode, trying to see an improvement. I sense one interest aspect. The corporates present in our conference. And by the way, we had like 150 CEOs of conference, so it's the best lineup conference of the region, have with a better mood, better tone from the equity investors. We do like AI here, sentiment analysis on our strand, and on this season, we do like a 0 bear, 10 bull for the management speech on the conference calls. The management speech this quarter was 7.4 for the Brazil coverage, and which means that you are slightly positive tone, is slightly less than the fourth quarter, which was 7.7. So that's kind of a little bit the mode of the conference.
Interesting. So you mentioned market composition, and I think one of the most common tropes I hear about LATAM is that, oh, it's just commodities driven. Investors just assume Brazil is a commodities market, but that's not the case, right? As you highlight, it's a third roughly. I think Peru is maybe the heaviest commodities equity market. So can you just talk a little more about composition? Like, how important are commodities to LATAM markets, Brazil's market?
You take the commodities is important in the index, just to get the exact number on the MSCI for Latin America. Commodities is 32%, so one third. Big numbers that I told, but it influences a lot the economy. I'll give you an example of Brazil. Our trade balance in the last decade was roughly ranging about from 40 to 60 billion dollars in the trade balance. Last year was 100 billion, 99 to be exact. What happened to that change? We increased a lot the soybeans and the agribusiness exports, but we also became relevant on oil exports. Brazil is now the largest the 9th largest oil exporter in the world. Oil is now the fourth largest product in our export product base here. So in the end, it permeates the economy because it's more dollars. It helps the current account deficit, helps the profitability of the corporates related to that segment. Just to give you an idea, Brazil, when you look at agribusiness stocks in Brazil is I would say the farm of the world, people like to say. Stock weight is around 5% of the index, agribusiness. But when you look to our GDP, agribusiness represents, depending on which industries you consider agribusiness, 20-25% of GDP. So if you ask me one day, what do you think is gonna, in my view, in the long term, the stock market is going to direction to be a representation of your economy. So that's is a segment that it may gain relevance in that matter. We run a lot of regressions here, and Brazil is very correlated with oil when you do that. Colombia is also very correlated when the market trade oil, and to CRB, the whole commodities in Latin region is very correlated. So although it's 1/3 of the index, it permeates the rest of economy, it influences directly the consumption, more money on that. It may see as negative in the short term because the volatility of earnings, the lower multiple that people pay in commodities. But I would say in the long term, I think what matters a lot in commodities, and by the way, linking one of the books, our book club, it's called Capital Returns, that he talks a lot about this. Instead looking at the demand side of a sector, look at the supply side of a sector. And we see a lot of sectors having less investments in the commodities. So I think that's one thing that leaves me more positive for the long terms on the commodity side. Also, you take what worked this year in the world, momentum in factor And inside that sector, tech was a sector that worked a lot, and Latam is very low represented in tech. Like it's 1% of the Brazil index, and it's going to improve slightly on the next MSCI rebalance because we're going to add some tech stocks that are traded in the US. But we are not like when you think like tech, you have more like off-bench bets here, like Mercado Livre is a tech stock that is off bench. Nubank is a name that we hold in our portfolio that is off benchmark. It's gonna go probably very likely on the benchmark in the next rebalancing. But so that's it. Like it's a commodity linked because it matters a lot for their day by day on the economy. And then you have like idiosyncratic. Chile, a lot importance for like copper related and somewhat in lithium. Peruvian, a lot copper related. Brazil is a little bit more oil matters because on the stock market wise, we have more weight than Saudi Arabian energy. So it's some counterintuitive in the index. But every country has its own commodities and representation on the index.
So in your model portfolio of the three sectors, you're most overweight domestics in Brazil. Is that correct?
Yes.
So can the domestics still perform in a global commodities, say, stagnation or bear market? Or does Brazilian domestics, do they need a commodities uptrend to perform well?
I would say stabilization sidelines in commodities, it's okay. Because today, what's happening with the market is everybody is expecting this backwardation. Oh, the commodities prices are falling. This backwardation is happening lower than you expect. So oil is with a higher price than people expected like a few months ago. Pulp is with a higher price than people expect. Even iron ore, which is very important for Brazil, it's holding better. And with this China stimuli, it's may work and hold better, relatively speaking, in that region. So I would say you need to expect some stabilization. So if you say no, commodities are going to fall off the cliff, then you're going to get to a risk-off environment here. Why you are more commodity, more domestic driven? I like a lot the financials. So we are very overrated financials because the quality, the carry, like you can buy good banks yielding you 7-8%. Dividend yields. Banco do Brasil, which is the largest Brazil bank here, trades at 4 times price earnings, 10% dividend yield. I joke with some buy-side investors that Banco do Brasil is the blind wine tasting call because how much would you pay for a stock that grows 5-10% per year, pays you 10% dividend yield, and has an ROE near 20%? If you don't know the name, the answers that I receive is, oh, if it's a company, it's like high single digits. If it's a bank, if it's not a bank, it's like a mid-teen kind of stock, times of PEs. And I say, okay, it's Banco do Brasil, 4 times earnings. And people, oh no, I don't want. But the profitability of the financials, the region is very good. So that's one thing. And to go to the domestic market here, what we say is that you need to go to quality. We are not advocating here now to make the teaser go to smaller caps names like leverage stocks, that kind of thing. I think still there's a lot of risk premium to be extracted on the larger cap and on the mid cap in the universe. Just one step back. If you take the world is trading between 5 to 10% premium to historical price earnings forward multiples. Latin America is trading between 15 to 20% discount. So the whole index. So there is premium to be extracted to on the larger cap side. And if you want to go domestics, you have like 2 ways of doing that. I personally think in Brazil, the 2 teams that we like here, one is which I call infrastructure and bond proxy with double-digit IRRs, real IRRs. So just to give you the context, our inflation-linked bonds in Brazil are now slightly above 6%. So it's a very high real rate. Then if you see an utility company, a port company, railway company, it's offering you double-digit level of real IRRs. Like Sabesp is a name that I like, the water utility. I like the Equatorial, which is the energy distribution company. It gives you 11, 12, 13% levels of real IRRs. The time to buy that kind of companies that when they spread the real rate rate is a high, is one of the historical highs. So that's, I think, in the end, what the countries in Latin America need. We need infrastructure. Those are types of infrastructure investments that we need in that matter. Even like shopping malls, I kind of consider my mental framework, the shopping malls is the infrastructure of consumer in for Brazilian names and for Chilean names. So I think they are offering like a attractive level of valuation. So that's I think that what we think is interesting, especially in Brazil and Chile. You got interesting on that teams. When you go to the domestic, more cyclical stories, the banks I already mentioned that I like the banks. Transportation is a sector that is interesting. Like you have largest rental car company in Brazil, like trading around 10, 11 times earnings next year. Used to trade close to 20 times historical average PE. So as time passes by, can converge. By the way, it was the most demanded company in our conference in terms of meeting requests. It's not performing that well short term because everybody's concerned with depreciation of the cars. I think it's a matter of time when it goes there, but it's a high ROE kind of story. I also think it's interesting to look in some quality consumer names, also traded material discount to historical in that matter. Also, low housing income in Brazil is interesting. You are aligned with the government. There is a housing deficit reaching more than 5 million homes in Brazil. And the government is trying to help. And if you find an efficient operator in that matter, it's an interesting way to that. And I would say the staples, I prefer to look at staples more on the Mexican economy and maybe on the Chilean economy. I think the staples there have a higher level of ROEs versus the Brazilian environment in that matter. But I think Brazil, just to when you put in a context, Brazil now is trading at 8 times earnings. The historical average is 11, so you're basically give or take above 20% discount to historical. Then you can make counter argue, but you are in a higher rate environment. I would say two things to mention. The earnings yield gap today, so the difference versus the earnings yield less the 10-year real rates, today it's around 6.5%. So you're getting this as an equity risk premium. And historically in Brazil has been 4.5%. So you have like a one standard plus deviation above historic of earnings yield gap. So even adjusted by these higher rates, it looks attractive valued in that matter. And people forget that we are in a monetary cycle improvement, because if you take less 12 months, big numbers, we already reduced 300 bips, rough numbers in terms of the Selic, our basic rate. Recall the last year we were at 13.75, and now we are at a 10.5 in terms of monetary rate on that matter. So that's why I think I hold commodities in my portfolio. I do like basically two commodities. I like oil and gas related stocks because I think Latin America is where the marginal growth of the production is coming. So if you look at the Brazil growth in terms of barrels per every year, we're going to increase that. And I also like the pulp stocks here. I think pulp is a lower volatility commodity, and the price is the backwardation is not happening as people expected, and is a more disciplined supply level as well. What we are underweight today is more longer term is on the steel and mining sector, because I still think this recovery of China is a little bit more domestic driven and less infrastructure driven kind of recovery, and iron ore is very important for that. So that's why we are underweight the iron ore related stocks. But it's not a big bet. You totally don't hold any commodities. It's an equilibrated portfolio over financials, over some domestic, and over some selected commodities. But as a category, given the rating in iron ore, leaves us underrated commodity related.
Great. So let me ask you then a couple company specific. First, for listeners, the rental car company is Localiza. That's the name. If you want to look at a pulp and paper industry that Danielle highlighted, Suzano would be the market leader. But I want to ask you about oil and gas. You said you're bullish oil and gas, and I think Petrobras is probably the most followed company among my audience in Brazil. So do you have an opinion on Petrobras? I mean, there's a lot of news recently.
So you're talking about Suzano. Suzano is a name that we think is interesting. Is the lowest cash cost producer of pulp in the world. His stock fell recently because the capital allocation they have an attempt to
Mhm.
buy some company internationally, but we think long term they generate very good capital allocation in their past deal. So it's a matter of time when the stock recovers.
And for oil and gas, then, what do you make of Petrobras? I have to ask you because my international audience is fascinated by Petrobras. I see all kinds of takes to hyper bulls or people that are panicking because of the government changes. So, what's your opinion on Petrobras?
I would say we have a comfortable position of being neutral in our long only allocation here in the index. But if I have to position myself between underweight and overweight, we'll be more positioned on the overweight side.
Okay.
Why is that? I think historical CEO changes were buy opportunities. By the way, when I was in the global hedge fund, one of our largest positions in the beginning of the fund was in Petrobras when there was a CEO change and we bought the stock. And I think the stock is giving you like an extra dividend yield, so you get cash back for you in the end for that. So we do prefer the junior oil companies, which don't have this state risk intervention, but we like the oil in Latin America, relatively speaking.
Yeah, that's a very balanced view compared to some of the takes I see on the company. So let's talk about the Latam scorecard then. So your proprietary model, you guys quantify and rank Latam countries in 5 categories: earnings trend, valuation, economic momentum, technical position, and quality. So maybe we could just take those one by one. You mentioned earnings trend already, specifically the earnings gap, and you highlight Brazil as the most attractive in terms of the earnings gap. Is there anything else you think we should cover there?
Yeah, no, I would say when you look, as I said in the beginning, I'm much into the quantitative aspect of these factors. When you look in terms of earnings, I like to look at three things. Does this company of market growth relatively higher than their peers? That's one. Does the sell side revise up or down the numbers? That's true. And the other thing is an engineering thing, the second derivative. Is the company of market accelerating? I think interesting aspect of the region is that they are re-merging and is going to deliver, like Brazil, for instance, is going to deliver around 13-14% growth, double-digit growth in EPS. It's accelerating from a lower base last year. And earnings revision at the beginning, so I expected the earnings revision for the market will be on the negative side because this monetary policy delays. But given the commodity backwardation, hence the importance of the commodity stocks, like it helps. The financials also did well. So in the end, like the 2/3 of the market, which were commodities and financials, helped to attenuate the domestic rather than financials earnings revision. So I'd say earnings trend is on this slight positive mode for the region. Mexico is the market that has been more consistent in terms of growth, and that's I understand why the investors are more positioned because you have like a beyond 2024 looking in terms of the growth pattern. But for the region, I consider earnings trend, I would say, slightly positive on our scorecard here on the quantitative, but looking at the qualitative aspects and explaining that.
Okay. Well, what about valuation then? Because Brazil, Colombia, Latam in general can screen as very cheap on price to earnings metrics and whatnot. But I've seen a lot of pushback online. I mean, I think last week there was a meme on the Brazilian finance internet where people were posting Brazil's cheap on a price to earnings basis. And then they would post, some Portuguese guy from 1400s and show that people have been saying that forever was the implication. So why are these markets so cheap on a valuation metric, and what's the catalyst for them to rewrite if you think they will eventually be rewritten up?
I think I would say the first question is, can they re-rate at some point in time? And to answer that, in the end, it's going to be like a bottom-up case by case. But when you
Mm.
do that, we think that more than 90% of the index weight can go back to average at some point in time in the cycle. So there will be some like consumer healthcare and some tech names that came to the market that I would say came very expensive and they will not go back. But then look, can commodities go back to average? Yes. Can financials go back to average? Yes. Can utilities infra go back to average? Yes. So I would say they can re-rate with that. Valuation by itself gives you like the GPS where you see a safety margin, but it's you need other things. That's why we do this scorecard. You need like this combination of other factors. You need to have this confirmation of earnings momentum. Recall what the feedback that I told you from the global equity guys. They want a less earnings volatility. So if the next quarter they deliver some kind of a growth confirmation and there's no earnings revision, there is stability on the earnings revision, that's one signal. I think valuation, when you look versus the world, is interesting. When you look versus the rates by itself is interesting. The earnings yield gap is interesting. Discount historical is interesting. Price to book is interesting. So I would say that's from my scorecard quadrant is more positive. Earnings trend, we're going to see quarter by quarter this confirmation. So it's going to be like a data dependent market. Quality, counterintuitively, one of the most surprising statistics of my roadshow, I'll go to international and say, did you know that Brazil has the best ROE among GEM countries? People didn't have that in mind. Mm-hmm. Brazil historical 5-year ROE was 17, 18%, whereas the emerging markets was at 11, 12. The pushback would say, oh, but you need to adjust by the high cost of capital. Even adjusted by that, we only lose for Taiwan, because Taiwan, the tech things like have the best ROE spreads. And one thing that I cannot answer them counter that is when you divide the ROE among those three asset classes, financials, domestics, non-financials, and commodities are running above 20% ROEs. So usually you would expect this ROE to converge and go down. Financials, they are running 17, 18% ROE, so they're fine. And domestics are running around 14, 15% ROE levels. They can improve slightly. But I would say ROE-wise, quality-wise, we rank well versus the rest of EM. What for me concerned was the technical positioning. Like, are the investors under or over our region, and how do you see that? And as I said in the beginning, my perception is that Mexico is a very overrate among GEM investors, active investors. Brazil is a fading overrate. So you cannot say that this is technically light yet. And what we saw here is that China has been one of the best markets in the emerging market in the last 3 months. I see investors doing like a kind of benchmark, reducing their underrates, because the investors were very materially underweight. So the tracking error was very high, and they were doing that. They were using like the Latam region for that matter. So for me, technical is where I feel a little bit positive on that. I think it's more on the negative side. Also, we need to bear in mind here, we have a domestic equity industry. This industry has roughly 600 billion market cap on equity funds, and they are receiving outflows. It's still minor, but still receiving outflows. So, and the competitor here is the fixed income, because a Brazilian here, you can make like 0.8% per month without risk. I joke that, and including myself, Brazilians are like a spoiled kids. You make like 1% without much risk. So you need to have the direction of going to single-digit basic rates to reattract people back to equities. Our numbers, like our macro numbers here, the terminal Selic rate is on 10.25. So we are not expecting going to single digits. So that's why positioning for me is one that I feel a little bit more on the negative. And on the macro side, which is the economic momentum, macro, you have good things and bad things. For instance, good things, GDP has surprised, because consumption-driven part of our economy, 2/3 of our economy is consumption, surprise on the upside. You're going to have like a blip, I think, in second quarter, because the natural events that happen on the region of the south of Brazil. But longer term curve is stress. And if you do a mathematical comparison, looking at average duration, 1 percentage points of longer term curve equals 10 percentage points in a year of EPS growth. So that's why every like 100 bips, that's why I think like Fed matters a lot. And can we see a resemblance of movements that happened on November, December last year, that Treasury peaked at 5, 10-year and went down at 3.7. The Latam market performed well. I think the reasoning, the rationale remains somewhat in that direction. So if you have I would say a soft landing from Fed, I would say that we can see flows coming back to Brazil from international investors. Big numbers. Last quarter of the year, it entered 50 billion. It left around 33 billion already this year. So very high shot, fast, very high down, fast in terms of flows in that matter. So to summarize, I think on your meme, and I think valuation is good. It's one of the most attractive level historicals. I think earnings trend is decent. I think quality is on the good side. By the way, the best Castle have wide moats. That report that we wrote about using the Columbia framework, the Warren Buffett. I am a Berkshire fan and framework trying to apply that to Brazil. But positioning is not ideal and macro is not ideal. So that's why I think that's why the market is underperforming in the shorter term.
So let me ask you a little more then about Brazilian rates, because we're well into a rate cutting cycle. And even if the terminal rate does get to 9 or 8 with real yields at 4 or 5, that's still pretty attractive to sit your money in fixed income in Brazil at a 9% yield. So we haven't seen an impact on equity markets yet, even after a few rate cuts. How low do rates have to go in Brazil before you start to get that flow in the domestic market out of fixed income and into equity?
That's a very good question. We did a very meaningful survey, 168 buy sides, more than 100 billion AUM, and asked, what's the magical number for equity inflows in Brazil market? And the median answer was 9%. So you need to go at least more like 1 percentage points lower basic rate to start to attract that. So when you start to get 0.6, 0.7 monthly returns without risk, then people, I think, will try to act to counterbalance that. Usually in Brazil, the pension funds, which have more than 1 trillion in assets, are a meaningful player in the asset management market. Their actuarial targets are around 4.5% to 5% real rates. Now with the inflation linked bonds at 6, you can you're all using the real rates. You don't need to add more risk on the portfolio. So I think we need to get to that level to foster the animal spirit back. It looks shorter term more on the unlikely side. But if you ask me, do you see outflows for equity flows in Brazil going to the end of the year or inflows? I'm more tilted to small inflows. I think people were trying to do last year, there will be a meaningful financial deepening in the market. And I was against that number because I think different from the past cycle, our rates will not go to 2, what happened. We'll go to 10, 9 something. Our formal number is 10.25. And also, you have a new competitor to that, which are the credit bond market, which is the more than 1 trillion notional that remerged in the last 5 years. So that's why I don't believe in a big financial deepening, but I think it's like a kind of, you having a stabilization to do the math, it already happened. So, but to answer your question, 9% is the magic number. According to our economists, we will not get that this year.
Interesting. So I want to ask you about small caps, because you mentioned your experience with small caps and that you loved going through and being the only person following some of these companies and looking into them. So they've lagged in Brazil, correct? The small cap index compared to the Bovespa?
I think I prefer today still Ibovespa versus the small, because the larger caps, some financial, some utility, some others, still have like a higher risk premium. I think the dummy variable is that when there is inflow to the domestic asset management industry, then small caps will be on the turning point. That being said, there are a lot of interesting small cap to look in Brazil. On this moat report mentioned like small mid caps, and this comparison of small caps is relative. Some people use $3 billion, $2 billion. Some people use $5 billion on the small cap comparison. Here in Brazil, the domestics they use less on that matter, but I still think there's more actual risk for the larger caps. On the smaller caps, there are nice stories like Fras-le. Fras-le is like an aftermarket company, niche. Randon, that is controlling parent of company of Fras-le, like two small caps, very very attractive valued. Santos Brasil, which is a small mid cap, like on the port, it looks interesting. Real estate, like Direcional, those kind of. There's a lot of nice stories that you can apply our main themes, the quality cyclicals and the infrastructure, also on the small cap environment as well.
What advice would you give an international analyst if they were going to look at Brazilian small caps? I mean, what's different? What should they know? Are there any landmines they need to look out for?
I think I would use the local buy side owners and holders as a channel check to test that. So use the network, try to get advantage of this benefit. I would say Brazilian investors are like very open to have these discussions because they always like to see this 360 view, even if you are bear or bull. So they talk a lot on that matter. Look at the consistency because in Brazil, cycles are shorter. So look at the numbers. Did this company deliver in the last 3 to 5 years? Not what they're promising to deliver in the next 3 to 5 years. So historical performance may help you to use as a base rate for the next year because time there were some speeches that were very positive and you look like the base rate, so it looked unlikely. That's all. Base rates, network connections, consistency of ROIC over ROC are important in my view for these smaller cap compounders.
Great. So you also wrote a report covering competitive advantages of Brazil, and you highlight some companies, but maybe let's just generally talk. What are some of the industries or sectors that have long-term economic moats in Brazil?
I would say financials for me stand out. Because you have like so much concentrated market share, very consistent historical level of returns. Sure, there are some new banks dethroning some like incumbents, but in general, the profit pool of the financial market has been very good and very disciplined in that matter. And the other niche that we see some infrastructure related names. So infra, you see some moat kind of companies. And then there is a sector that is still not very well represented, but I think in the midterm you can see more companies of that joining that list is the healthcare. When you look globally speaking, healthcare is a moat sector in Brazil. It hasn't seen that in the numbers. We discussed a little bit on the report that issue. And some consumer related companies, some transportation related companies like Localiza, as I mentioned, rental car that has delivered ROIC spread historically. I think I'm seeing more international investors positive with our industrials. So industrial is a sector that some companies have made. If you ask me, regardless of valuation, give you an example of one of the best companies in Brazil, like WEG, the industrial company. It's an awesome company that has a consistent ROIC spread, is aligned with a lot of energy efficiency trends that you go there. So there is industrial companies, this Fras-le company that I mentioned to you. We separate in two types. The proven moat stocks and the new moats. Like this Fras-le, this aftermarket company is also a new company that joined that list. Santos Brasil joined that list. You have some moat on the techier side, on the pan-Latam kind of stocks. So like Mercado Livre. Mercado Libre is a name that looks have a lot of moats. It's the main used app here on for e-commerce. So let's say financials. It's a lot. Some tech, some industrials, some consumer, and maybe going forward healthcare. You may see that matter. What we use that we use basically ROIC over WACC spread historical to look. And we look in terms of a cycle. We look at market share trends to see if they are able to to keep the market share fairly stable. It's a good indication. We look how much you price in or not, how much the market pays for the economic franchisee, how much growth you pay on that matter. But that will be some things to highlight in the report.
Okay, great. Last question then, because I want to ask you something for the retail audience. Because one of the feedbacks I get all the time is I cover a small cap in Brazil, but a lot of the retail investors don't have access. So I want to ask you about like the ADRs that list in Brazil or that list outside of Brazil, like Nubank or Stone, versus the companies that choose to list on the B3. I think Natura recently closed down their ADR program and is now exclusively listed on the B3. So do companies trading outside of Brazil trade at a premium? Are there advantages to them listing on the NYSE instead of the B3? Can you just talk a little bit about that?
That's I would say that's still an ongoing debate, but you can make a thesis that WEG trade at premium to the other industrials and is listed here on B3, is not trading on the US stocks. So I would say I wouldn't do that generalization. It depends on the business model, stock, shareholder base. If you are very niche outside, low liquid, like you're gonna have less attention in the coverage. So like a dedicated Latam sell side will be more attentive if it's listed here. So I don't see a correlation to say that trading abroad will make you be worth more. I think is still for debate that, but I can give a lot of counter examples that
It goes both ways, right? You see some
yeah.
companies delisting and some companies that choose to do it. So it's idiosyncratic, I guess.
Yeah, I wouldn't see a generalization for that.
Do you think retail investors then that only have access to ADRs can still put together a good stock basket from Latam? Is there enough diversity of issuances trading outside of Brazil?
You'll be less exposed to the small caps. Then maybe you can get an ETF for that. But you can get the beta because the financials, the infra names, and the commodities names have ADRs. So you can get a good exposure for Latin America using ADRs. If you are a really small cap guy, no, then you need to be local in that matter.
Great. Dan, this was a fantastic conversation. It was really interesting for me. So let me get you out of here. Before, can you tell listeners where they can find you, follow your work? Where can they sign up to receive future research from your team at Itaú?
You can like link me on LinkedIn. There, like I post some of our research. Our research is available for the clients, so it's not open. It's not an open platform. So Itaú clients, if you are like a Itaú client and you don't receive the research, you can contact us for that matter. So I would say those are the two channels to receive the research today.
And the book club. How can they find out about the book club?
The book club I'll send to you. We did a very nice presentation, the 65 edition of book club, with all the lessons. How did they make money reading books? Because I'm big believers that theory and practice meet in between and generate alpha. So I'm gonna send you to the link, and you can share to your audience on that matter.
I'll put all that in the show notes. Daniel, thank you so much for doing this.
Yeah, thank you for the invite.